Right, quite a busy day for markets. It's set to continue to be a busy day for, in fact, a busy week. And helping us sort of navigate through the high-risk factors is Jameel Ahmad, who is the Global Head of Currency Strategy at Market Research FXTM. I mean, Jameel, so much happening this week. I don't even know where to begin. But I suppose top of mind right now is the US midterm elections. You say ordinarily midterm elections wouldn't be quite a fuss for markets, but these elections are kind of different. Why?
Absolutely. It's definitely going to be an interesting week for financial markets, and many in the markets are going to be monitoring these events very closely. In terms of the comment towards why this midterm election could be much more different than the past, which have seasonally not had that much of a wide impact on financial markets, it comes down to this unpredictable world that we seem to be living in the modern era, and the unpredictable news flow that we do get from the White House from time to time, specifically on the controversial nature of some policies and speculation behind the scenes of other things that might be going down at the White House on future directions. And we're seeing a very low volatility of trading volumes over Monday and Tuesday, which also does suggest that investors are taking this elections pretty seriously. There's low trading volumes. We're not seeing that much risk appetite in the markets, which is a pretty good indicator of investors not wanting to take on risk at a time where you have got this market event that's coming up in just a couple of hours. And we're also seeing emerging market currencies like the rand. They're drifting lower Monday, Tuesday, which is another indicator of investors not really want to take on risk, probably in wait and see mode to see what could possibly happen just over 12 hours from now, which is when we would get the results on the elections come through as in data.
Right, so tick-tock at this stage. But Jameel, what would be an emerging market-friendly outcome regarding these US elections?
Over the medium term, it would be uncertainty. So if we get some sort of election outcome that hasn't been priced in, maybe the Democrats getting more power, or the Trump administration facing legislative resistance down the road, this could cause quite a sharp sell-off in the dollar, hypothetically, which is going to be good for emerging markets. Now, this hasn't been priced in my opinion. So what we could see is some volatility in the first case, which would be emerging market currencies, emerging markets heading a little bit lower on more risk aversion. However, a softer dollar and a weaker dollar from a greenback that is still historically very strongly valued at its current levels at 96, 97, and it's historically making emerging markets, including their currencies, very weak. Now, these look attractive because emerging markets still hold a lot of value, but they're being pinned down by a heavy dollar. If the dollar is no longer as strong because of maybe an election outcome which isn't so market friendly, this would provide a comeback for emerging markets.
Right. I mean, the pressure that we are seeing to the currency, I'm looking at the rand now, some 0.3% weaker against the dollar at this stage. We still have the US Federal Reserve deciding on interest rates. I think that is tomorrow or Thursday. Has the outcome of that event been baked into the current prices that we are seeing emerging market currencies trade at?
Yeah, we can quite well say that, to be honest, because the US Federal Reserve interest rate decision for this month at least is considered to be a non-event. We're not expecting any changes from the Federal Reserve. What investors will be monitoring is the monetary policy statement that comes after the decision, where markets will be looking for more guidance that the Federal Reserve do still intend to raise interest rates gradually over the remainder of 2018 and into the end of 2019. This is mostly ordering price into the dollar anyway. So as long as there isn't any sort of sharp change in the narrative or something that comes through as concerning for the Federal Reserve, we shouldn't see that much of an impact on the FX markets, and it shouldn't be seen as that much of a near-term risk for emerging markets. If I was going to look at these two big calendar events for this week, I would say that the US midterm elections has the potential to carry a lot more volatility for financial markets than the US Federal Reserve interest rate decision, which is considered to be a non-event in the grander scheme of things.
Okay, so shifting the focus now to the British pound. Quite a lot of excitement from investors there about where the pound can strengthen to, following hopes that we finally might have a Brexit deal. I mean, the implications for the expected pound strength, and why do you think that a 135 level for the pound is a bit too ambitious?
You have to consider where the pound is trading today, which is actually at 130 against the US dollar. So a move up from 130 to 135 is pretty significant. That's a rally of at least 3%. Now, despite it being very optimistically hoped that the EU and the United Kingdom are finally close to reaching some sort of agreement, we have to remember that Theresa May, the UK Prime Minister, will still need to seek approval and probably pass this through either the UK government or the UK cabinet. There will be some sort of vote behind the scenes that she still needs to do to secure the deal, which is expected to be announced. We've been in this shoes before, though, where we thought that we're close to a deal being announced, but yet there's been no deal as such. And if anything, the contrast in comments from the EU and the UK, if we look at recent Brexit events, has been that they're very far from a deal. So this is why I would say that at the moment, it looks like markets have shifted themselves towards being positioned for a Brexit deal, which is probably somewhat priced in. The pound has recovered from 126 to as high as 130 over the past 2 weeks. It suggests that investors are not so prepared for more bad news, that potentially they're not as close to reaching a deal as everybody hopes they are. But of course, we do hope that a deal is close, because we're just over 3 months away now from the UK having to leave. And it looks quite horrendously underprepared as it currently is today.
Well, Jameel, thanks for your insights as always. We'll leave it there. That was Jameel Ahmad, who is the global head of currency strategy and market research at FXTM. Right, let's take